Hello everyone, welcome to Cheongfuli Weekly Report. We bring you the latest price and market analysis of China's steel market every week. This week, spot prices rebounded slightly. As of now, rebar spot prices are up 30 yuan per ton from last week, and hot-rolled coil spot prices are up 20 yuan per ton from last week. Prices have been fluctuating recently, with volatile market trading sentiment, but overall activity remains low. On the macro front, US President Trump said that overall progress on the agreement to reopen the Strait of Hormuz is going well. A spokesperson for Iran's Islamic Revolutionary Guard Corps stated that the reopening of the Strait of Hormuz depends on the United States fully accepting Iran's conditions. US seasonally adjusted non-farm payrolls decreased by 23,000 in July, compared with market expectations of an 80,000 increase, marking the first negative growth since February this year. The May and June employment figures were revised downward by a combined 103,000, with the three-month average employment at only 20,000. The data came in significantly weaker than expected, and market expectations for a Fed rate cut have cooled notably. On the supply side, total volume increased slightly. This week, the total supply of the five major steel products reached 8.0596 million tons, down 123,400 tons week on week. Meanwhile, hot metal production rebounded week on week this week. By product, rebar output decreased, with this week's output at 1.898 million tons, down 105,100 tons week on week. Hot-rolled coil output decreased week on week, with this week's output at 2.8773 million tons, down 49,300 tons week on week. On the demand side, demand weakened week on week. This week's apparent steel consumption was 7.8859 million tons, down 233,000 tons week on week. Specifically, apparent consumption of rebar was 1.7838 million tons, up 204,600 tons week on week. Apparent consumption of hot-rolled coil was 2.8577 million tons, down 14,500 tons week on week. Demand continued to weaken this week. Against the backdrop of the off-season, the market remains relatively pessimistic about the outlook, and speculative demand is weak. In terms of inventories, total inventory of the five major steel products increased slightly this week. Total inventory of the five major products stood at 16.5319 million tons, up 173,700 tons week on week. By product, rebar inventory was 7.1039 million tons, up 113,200 tons week on week. Hot-rolled coil inventory was 4.4595 million tons, down 19,600 tons week on week. Overall, domestic steel spot prices stopped falling and rebounded this week, with the market stabilizing week on week. The industry presents a pattern of reduced supply, weakened demand, and accelerated inventory accumulation, with fundamentals weakening week on week. The market is currently in the traditional off-season for consumption. Terminal construction project progress is relatively slow, downstream procurement willingness is weak, and overall demand growth is relatively limited. On the supply side, hot metal production has bottomed out temporarily, but has not yet reversed the inventory accumulation trend. From the cost side, recent raw material price rebounds provide cost support for steel. Currently, the overall market expectation for the outlook is cautious and pessimistic. Steel prices are supported by raw material costs on the downside and suppressed by weak realities on the upside. Short-term steel prices are expected to continue oscillating. For the subsequent trend, close attention should be paid to the US-Iran conflict, as well as changes on both the supply and demand sides of steel and the progress of coal mine resumption. Based on the above analysis, the operational suggestion is to adopt a demand-based procurement strategy and strictly control inventory risks. Institutional analysts hold the view that against the backdrop of undervalued steel prices, expectations for a seasonal sequential improvement in steel demand are conducive to a short-term price rebound. However, no notable improvement has yet been seen in end-user demand for construction steel. Unresolved market contradictions make a trend-driven rally unlikely. Prices are expected to remain range-bound in the short run, and a trending market awaits clear validation from end-user demand. In summary, steel prices will generally maintain a volatile trend. Close attention should be paid to changes in steel inventories, domestic macro policies, and the supply of coking coal. Okay, feel free to leave your thoughts, questions, or any related inquiries in the comment box below. And if you found this video valuable, don't forget to follow us for more updates. See you next week.